Take a look at what just happened in New York. New York just proposed, and it's obviously going to get signed, a new tax hike that is going to make New York the highest tax in the country, particularly New York City, not all of New York State. They want to raise the top rate in New York to 10.9%. Now, albeit you got to have $25 million a year income before you hit the 10.9% bracket. So not that many New Yorkers are earning more than $25 million a year, but there are plenty of them, especially living in New York City. So they're going to get hit with a 10.9% rate. New York City on its own has a 3.9% rate. And the federal rate right now is 37%, plus you get a 2.9% Obamacare rate. So after this tax increase passes, the top marginal rate for anybody dumb enough to still live in New York City who earns this type of money, the tax rate will be 54.7%. And of course, this is before the Biden tax hike. Biden is proposing raising the top rate from 37 to 39.6. So if you add that in, that would bring the tax rate in New York City to 57.3%. So why anybody would want to pay almost 60% of their income in income tax. And of course, those aren't the only taxes you pay. With the 40% you have left, right, you still have sales taxes, property taxes. So the government isn't finished taxing you when they take the income tax. No, they're just getting started. They tax all this other stuff. But, another important thing that people have to consider, and it may not be part of this tax hike, but I bet it's going to be in the next tax hike. And it's probably going to happen before the end of the Biden term because they already talked about this. They floated the trial balloon. They just haven't actually come up with the real balloon yet. But I believe that they are going to eliminate the cap on the payroll tax, the 12.5% Social Security tax, just the way they eliminated the cap on the Medicare tax. At one point, the Medicare tax only applied to the first, I don't know what it was at the time, 70, 80,000 a year, whatever it was of income. But then they made it unlimited. They did that before Obama. I can't remember when, but Obama came in with the Obama tax where they applied that 3.9% tax to capital gains and other income. Prior to that, it only applied to earned income. But at one point, there was a cap, and then they eliminated the cap. Well, I think they're going to eliminate the cap again for the payroll tax. And one of the reasons is because the Social Security system is imploding right now because so many people are not working because the government is paying so many people not to work. Those people are also not paying into the Social Security system, but you have more and more people as the baby boom retires drawing benefits from Social Security. And so there's a huge hole there between what the government collects and what they pay out. How are they going to fill that hole? Well, one way they're going to try is by increasing the payroll tax, but the way they're going to do that is not necessarily increasing the payroll tax on the lower income people, but they're going to make the current rate apply to the upper income people. I mean, that's just going to be the first step. Then eventually they're just going to raise the rates on everybody. But the first thing they'll do is they'll apply it to all the income. So if we get the 39.6% top federal rate imposed, and if we make the 12.5% payroll tax apply to all your income, then the top rate in New York City will be 69.8%. So call it 70% income tax. I mean, will the last millionaire in New York City turn off the lights before they leave? Who is going to want to stay in a city where you have to pay 70% of your income in tax? You're left with 30%. I mean, when the government is taking 70% of what they earn, the government is making more than twice as much as you are. You're making 30%, they're making 70%. I mean, who's working for who? I mean, you're already a slave to the government when the government is taking 54.7%. If the government makes more than you do from your business, the government owns your business and they own you. Well, if it's 70%, well, then, you basically flip serfdom on its head. Remember, the medieval serf got to keep 75% and the lord only got 25%. Well, in America, if you're getting up to 70% federal tax and then you throw in some other taxes, they've actually flipped it. And modern day Americans have to give to the lord, their lord, the amount that they used to be able to keep instead of keeping 75% and turning over 25%, they keep 25 and they give 75. So people are not going to stand for this, and the government is not going to collect that revenue. And I know a lot of people want to say, but Peter, once upon a time in America, we did have a 70% rate. Hell, we even had a 90% rate. So why can't we go back to a 70% rate again? There is a big difference between those high rates that we had back then in the 50s, for example, and the rates we have today. Because back then, there was only one kind of income. There was massive deductions. So people's effective tax rates were much lower than those marginal rates. Hardly any taxes were actually collected at those high marginal rates because the code left lots of room to avoid those taxes. And so that's the only reason that we were able to survive with those taxes, was because people didn't pay them. But even though a lot of people want to talk about all the deductions and all the loopholes, they are there, but they pale in comparison to what used to be there. So if rates got to 70% again with the current tax code, and of course they're even talking about closing even more of the loopholes, but the effective tax rate would be much higher than it was in the past. And since it would be much harder to avoid these confiscatory taxes, they would do far more damage to the economy now than they did back then.